I'm as center as you can get politically, and I dance on both sides of the aisle depending on the issues, and I have my whole life. 98% of my friend network is DC. But I also found for the longest time, like I was afraid to say what I thought.
Hey, John, welcome back, buddy. It's
Hey,
been a while.
Man.
It's good to see you.
This is my highlight of every year. Last year was the highlight of my year. And
I love when you say that, by the way. So I had you on the podcast last year. Last year was virtual. By the way, you motivated our whole team to be like, how do we make our virtual look like that? And so we tried to copy it for 6 straight months. We finally figured it out.
Nice.
Getting the right camera, getting the right lighting, all that stuff. So anyway, you did a good job on your virtual setup.
Oh, thank you. And what's funny is after maybe June, I just stopped doing video.
Did you really?
So I just literally started back up again.
I want to hear all about this because what I do know watching you from afar is you've become famous on Twitter. I've seen some of your posts have many millions of views and comments. So first of all, we're not going to get into mortgages today. We're going to get into your fame career on Twitter. How has this come about? Where is it at these days? I know I don't keep up with all the stuff that's happening.
Yeah.
So let's go ahead and start that. Eventually, I want to hear your most popular tweet. But go ahead and start us off how you got into it.
Yeah, so it's funny. So when Musk took over Twitter, it was just sort of my catalyst where I said, I just want to see what this thing's going to be all about.
Yeah.
What does it feel like? What does it look like? Very quickly, I realized that you could kind of say whatever is on your mind.
Yeah.
For real. You didn't get the feeling that it was going to get suppressed. I felt more emboldened to just say whatever I wanted to say.
So you're kind of should I say this? Let's go.
Yeah, exactly. and I haven't been canceled yet, right? So my wife still thinks I'm going to be soon enough. But that's where it started. And really it was, there's this book I read a long time ago. It was a real estate book. There's a chapter inside of it. It says you're either visible or invisible. And I feel like I am a big brain that has a lot to say. I think a lot, but I can be kind of invisible, right? My kids are in college recruiting years. It's just my personal life makes it so that I'm not on social a lot.
Right.
So that was sort of my way of just getting into conversations to give my thoughts and perspectives out there.
Yeah.
And then it just gained traction where it was, I think you follow enough of the right people and you can have enough of the right conversations. And it's also, although a lot of people will be like, oh no, you get a lot of hate and a lot of spam and trash. But what I found from it is you could take dissenting views and actually
have a conversation,
hash it out. Right. And to the point where I would change a lot of my views, they would change theirs.
Yeah.
So I found that interesting.
Yeah.
And I didn't have that on Facebook, right?
Yep.
That's not really a platform for Instagram.
Sure.
I purposely have never been on TikTok because it ruined my kids and I promised it's banned from the whole house.
So that's how it started. And so was there one usually there's one topic that gets a lot of momentum. Is that kind of what happened to you?
And really,
what was it?
Yeah. So there's a lady named Amy Nixon.
Okay.
She's in Texas and she was just trashing on Airbnbs. And she had a lot of good data on Airbnb. And I was sort of in that same camp. So we were in the system was rigged against the small guy kind of approach. And I do believe that. I think the rich have gotten very, very, very rich over the last few years and the regular people are struggling. And I think the way underwriting and the way people could buy houses and the short-term rental lifestyle, a lot of that pandemic living sort of fostered the gobbling up of lots of houses. Yeah. So that we started with that, just picking on that mindset and how unfair that is and how there's going to be areas of stress. So then you started highlighting areas of stress that deepens conversation. Yep. There was Lance Lambert. He wrote for Fortune magazine. He started his own company called the Resi Club. So then he would, out of the blue, just to ask some questions. Yeah. There was another, actually, I think this might have been the viral moment. So one day I'm just sitting around the house and I'm business planning, trying to really think okay, interest rates have just gone parabolic. Business has stopped. What is the logical next thing that's going to happen? And I just started mapping it all out, like a big, huge board. And then I got to the point where I sat back and I looked at it and I started thinking, I said, in my whole career, there was always a refinance cycle that was on the back end of every economic issue. So when the economy was really good, people were buying a lot of houses and we do loans. When the economy stinks, people refinance all the houses they bought and we do loans. Yeah. So we always did loans. Yep. And I would meet new loan officers and I would say it's the best business in the world. We are recession-proof. Right. There is never a scenario where we don't do loans. So then I started mapping out, use that methodology and then kind of put it over what I was experiencing. Yeah. And I came up with the conclusion of we're screwed.
Yeah. And this is because the rates were so low at the time, there might never be a scenario where there's going to be a refi situation again.
It was a whole bunch of
Yeah,
things, right?
yeah.
So it was in the old days, especially here in DC, people would buy their first place would be a small little condo,
Yep.
and they'd squat there for 3 to 5 years, and they'd move up to a house. They'd live there maybe 7, and then they'd buy a big boy house somewhere when they raise their family, and they'd live there for 10 or 15.
Yeah.
But then what I experienced when rates were so low, everyone went straight to their big boy house, like right. They moved out to the burbs where everything, instead of the $700,000 condo or the 900,000 something in the city, it was the 1.2, 3, 4, 5, 6 house in Montgomery County, Northern Virginia.
It's a lot of volume getting skipped if people aren't moving up, right, to like homes along the way. And it's funny because I was just bringing this up the other day. Like, I still haven't gotten over the fact that I think we're in a long-term issue in the sense that all these people locked in 2.5 to 3%, and I know all the people in my neighborhood, and they're not even considering a move ever.
Yeah.
And it's like, so that is a tough situation when you're in a transactional volume-based business. And like, where does that lead to? And then I saw the next day you posted, I think, like very similar thing, which is the real housing issue that no one talks about is all these rates locked in at 2.5%. Is that,
yeah,
right?
Pretty much. Right. Yes. So the viral tweet in the moment, this is a funny story. So I then realized, I said, well, what if this is the time for people to truly get out? So everyone was holding on. We just need rates to improve, and I'm going to do a bunch of refis. So in 2019, I don't know if you remember, 2018, third, fourth quarter was like awful. It was hard. That's when rates were peaking.
Yeah, I do
Stocks then
remember that, 'cause I was trying to
cratered.
sell a house,
Yeah, it was just slow. And everyone just kept saying, we just need refis. Because if refis came, which they did in 2019, you were able to refinance every loan that you did in 2017, 18, and 19. So as an industry person, that was your like get out of jail free. You're like, whew, all right, I'm back. Right. So then you had record years 2020, 2021. Then 23, everyone's like, I just need rates to get better. I'm like, well, who are you going to refinance? The 5 loans you did in the last 12 months?
Sure.
Right? So in that tweet, it was like back then you used to do tweet storms, right? A whole bunch of different tweets. But it ended with sort of the idea of like, what if this time really is different? What if the entire cycle of compensation that is experienced on the loan officer side, what if that is upended and ruined? And should you just go find another job? Should you change your career? Well, this guy then puts it in Housing Wire.
I remember this now. Yeah,
And
because
then
I read this whole thing about like maybe you should leave your job or whatever, and that's what it was. Yeah.
Yeah. So supposedly they said they had the largest number of unsubscribes to their newsletter based on that post.
You're shifting markets.
Yeah, but it was one that you didn't want to read at that point in time.
But you could not read it.
You could not read it. And looking back at it, it's served, had people really listened to it, they'd be in a better space right now because people are still holding on. Right. Yeah. And then the end of last year, they were still holding on for refis, and we were so close to having some. And there were some, but not nearly the amount that people expected.
It was like 10 days, 10-day period last
year. Yeah, exactly. And all government loans, like all VA loans, maybe a couple FHA, and very, very few conventional.
Yeah.
And then here we are now 6 months removed from that brief little refi window. And now we're back to confusion. Rates are starting to improve. We can touch on kind of the state of the market with Doge and new administration. That's a whole new thing. But rates still might not go low enough. I think they will, but they might not.
Yeah.
For people to refinance whatever they did, but it's still not a lot of volume.
Yeah, and there's not a ton of transactions and purchases that have occurred the last few years to provide enough volume for all these people in the industry.
Yeah.
To kind of make up the pain they've experienced over the last few years.
And no one wants,
like they had in the past.
No one feels sorry for
them. Yeah, of course not.
Right?
No
meaning like 2020 and 21 were good years. Yes. And you could just be the most brain dead idiot in the mortgage business and you probably would have succeeded. 22 was sobering. 23 was very hard. 24 was manageable. It feels like the manageable 24, especially with what we're dealing with in the DC metro area, it feels like that's probably the new norm for a while.
Yeah.
And then back to what we started talking about people skipping houses, that normal trend of buy a house 3 to 5 years, then 7 years, then 10 to 15 year, like 3 different houses.
Yeah.
All those people went to the 10 to 15 year house. There's a void. And how long does that void last? That could be a decade. It could require the city to transform, which they might be forced to do, right? You have business foreclosures, you have government getting smaller, the city still needs tax revenue. A lot of their have their high income tax base moved to Maryland, Virginia, right? Still maybe working in DC.
Yep.
A lot of businesses then said, well, if all my people moved out there, why am I paying all this expensive rent in DC? I'll just move my place out in like Bethesda or whatever. So commercial properties there went crazy.
Sure.
So DC's going to have to do something to attract business and people. So I still am very bullish, right, on where we're going, but near term, definitely some things to think through.
Yeah, I mean, DC is not known for being pro-business, and like a lot of people are leaving. It's hard. So like, it would be nice to see more pro-business stuff. Like I was reading,
I think they're going to have to.
They have to. Yeah. I mean, they really do have to. You know, I mean, they almost lost one sports team group, and then last minute, whatever. But hopefully, Commanders come back to their original spot. That'd be good for DC.
I think we're allowed to call them the Redskins now.
There you go. Exactly. They're going to change their name back. Lots happening right now. There's a lot of kind of confusion. What's going on? Like, how do you see it all? What I can tell you is from a year over year, as of like a week ago, things are similar to last year, if not the same. But is there a lag? What do you think?
Yeah. Of all the metrics that I track, and I track metrics for myself, but also for the whole company, and the predominant part of our company is DC, Northern Virginia, Maryland. So everywhere you'd expect a government employee to work or live. And so far, our new lead flow is the same. So new contacts coming in. Hey, I'm thinking about buying a house this quarter. Our new credit reports are the same. Our new contracts, our closings, like everything's identical.
Yep.
And then when you look at housing inventory is like 10, 12, 13% higher this year than last.
Yep.
Kind of on par with early 23, which early 23 was a fearful moment in real estate, right? That's when rates hit 8% and everything kind of went to a crawl, and price reductions and 2-1 buy downs, and everyone started singing date the rate and all that crap. So inventory, if you just looked at the numbers, you're like, okay, they're kind of the same. Single out DC condos, that's the one asset class in the one area that we see inventory double what it was in 2019. Every other area, every other asset class is 30 to 50% less inventory than 2019. So all single family homes, Montgomery County, Northern Virginia, Fairfax, like all those areas. So the question is, everything so far, like you said, looks kind of similar. Yeah. But then the spring market really starts in March, April. And to date, I've had 10 people. I had 2 new ones today send me texts. One person said, hey, my wife's job doesn't look good. We're gonna back out. The other one was, I lost my job. So I think I'm at 5 job losses and 5 fear. Maybe fear of job loss or fear of just what's going to happen. And so now that's 10 buyers that have just said, hey, I was going to buy this spring, but I'm not. And I'm just one guy that has 10 people.
I mean, it's a lot. And, one question might be, is there enough buyers out there where you don't see a huge difference, though, year over year?
So that was that's kind of what I've been seeing and what I feel. So if the average house last year had 3 to 5 offers, let's say, and when we say average, there might be a bunch of houses that have 1 or 2, and then a bunch of houses that had 10. Okay, so if 20%, let's say the entire government lost their job. Every single person in the area, and I think I read something that's 15 to 20% government employee in the area mixed in with contractors. So let's go with that number. And let's assume they all lost their job, like 100% of them. Like they're all gone. I'm sure there's some motivation that comes from people losing jobs, right? That keep other people out, like I've said, with the other 5 on my out of 10. But instead of having 5 houses, 5 contracts per house, you have 3. So maybe housing is more balanced. Right. Maybe there are houses that you actually can get seller pay closing and you're not competing, and you can get favorable terms that might include a home sale contingency. It might be more equally balanced buyer seller with some houses still being nuts and then some houses having opportunity. Personally, I'm excited about where we're going because the 85% of the people that are not affected by DOGE, job cuts, spending cuts, whatever, those people I think are going to have better opportunity. And then I think if rates continue to improve like they have been, and we'll talk about maybe why they're going low and will they go lower, but then that's going to bring a little bit more people in. So the people that thought they couldn't buy at a 7.5% rate, maybe at 6, which is kind of where we are right now, people are like, ooh, that I can maybe do that. My lease is up in March, April. Well, let me take a look at this again. So we lost some government buyers, but then we pick up some others.
Makes sense.
So I think it's likely to be more balanced.
Are these a great buy right now for a consumer? I mean, like they're going lower and lower. The prices are going lower. There's a lot of inventory out there. Like, does DC become very popular 4 years from now again? And the fact you got these condos on the cheap. What is your take on that?
I always believe that. Have you ever heard of that philosophy? It's called Dogs of the Dow.
Nope. Tell me about it.
So it's just this investment philosophy that if you buy like dog companies of the Dow Jones, like the companies that perform the worst in a calendar year, and you bought those the next year, I think your market returns far exceed the norms.
S&P? Really?
Or it's like something like that. So they always call it Dogs of the Dow. And so I think the DC condo market is the dog of the area.
Yeah.
And the prices I'm seeing. Now, I guess the question is always comparing the comparable rent. So that's the thing I haven't throughout the whole city that I don't feel I have a good understanding of, is that while prices have come down quite a bit, it's still a little cheaper in some areas to rent. But you start giving us 5.5%, 6% rates, that math looks good. Every time I have someone that reaches out and says, hey, can you run these numbers for me on this place? I go back and I try saying, what did this place sell for a few years ago?
Yeah.
And most every condo I'm seeing right now is a price of like 2015, 14, 16, 17, depending on where you are in the city.
Yeah.
One thing, I'm talking to a lot of people, like, what do you think's going to happen in DC? And one person made me laugh. They're like, come on, with Trump's ego, he's going to take over DC and he's going to make it like the best city in the world. Right. But, other people are like, no, keep him out of here. Orange man bad. I don't want him touching the city. And, but I do believe that when you get to the other side of this transition, like, we can't lose focus of that. Like, it's DC. We're the baddest ass country in the world, most stable country in the world. There's a lot of power around. And I just think whatever this transformation is, we've been a government sponsored area. Well, what if it just becomes something else? Like New York became a financial district and look at property prices there. So, I mean, I'm very bullish on future of DC, get past the uncertainty period that we're in right now and try thinking through what does the city do to attract new business and startups. And I mean, some of these commercial buildings are foreclosing on like a building. And there's so many of these stories where someone paid like $100 million for a building somewhere right around K Street and it sells for like $10 million.
I know.
So when they buy it for that cheap, they can reposition the whole building.
Yeah.
If you fast forward a year or two, you could have rent that's a fraction of the cost in DC than it is in Northern Virginia and Montgomery County. So what if all of a sudden, like, DC is the place to run your business?
That's interesting. Yeah, I mean, hopefully the DC leaders will stop scaring away businesses. We highly recommend. Businesses are good.
Yeah.
This whole like businesses are bad thing. It really upsets me. Because, whatever. But I do think if they can provide some incentives and get people to move here. I mean, one of the problems too with the condo markets is if I have some people that own for their coffee shops and restaurants and they're leaving these different areas, which it becomes more and more dangerous in certain areas and those condos aren't valuable.
So if everything is a big pendulum in cities, and I do believe this. So COVID wrecked cities. So if you then had work from home lifestyles, and then there was a sort of a defund the police movement, right? So crime in so many areas went up that we were not immune to that. So you had crime go up. You had work from home flexibility, so you could live wherever. Some areas handled schools better. The opening of, so some people went to the opening, right, to get maybe something more for their kids, and it just crushed cities. But now all of a sudden, crime's getting a voice. I think even Bowser was out the other week saying like, hey, we actually need to penalize and be tougher on juvenile crime and like some of these other things. So you have crime getting a voice. You have some money coming into whether it's capitals or maybe skins coming back, and then you get the government coming back to work full time. Yeah. And then when the government comes back to work full time, it becomes contagious. Like I'm already seeing it where all these other businesses are like, I know we had hybrid. I know we said 3 days. Now it's 4. Now it's 5. So you start then getting everyone back in. I do believe you start seeing all the small businesses come back into those little neighborhoods that died. And then, you blink your eye. Like if you go back
I agree with you. It's like happens pretty quick. It takes a little while. And then when it happens, all of a sudden it starts, this is.
Yeah, do you remember a few years ago, like Trinidad?
Yeah.
Like who wanted to live in Trinidad? The next thing you know, you had like $1 million houses in Trinidad. Exactly. And I was like, where did this come from? Yeah. And it was like 18 months. Yeah. Petworth, right, boom, exploded. So I think that kind of energy can come back just as fast as it left. Yeah. And the pendulum right now, I think, is swinging very hard in that direction. Yeah, this whole government employee thing we have to get through. Yeah. And then ancillary businesses like NGOs and whatever, like how much of all that money really flowed through our world or how much of it went to overseas or around the country, right? Yeah. It's hard to get any of that real data, but I think next few months we'll know. I think you and I talk 2 years from now, we're going to laugh at this. Like, oh my God, we were right.
We should have bought condos on the cheap. Where does it take right now on being a loan officer? Do you think there's an opportunity for someone to come into a market that no one wants to be in? What's your take on that currently?
When I look at our company and I start thinking of my personal life, so I started 25 years ago, I'm 47 now, and you could not outwork me for about 15 years. It was impossible. I just went in and all the old dogs that were just sitting back, I just stole all their business because I was more available. I didn't have kids. I had nothing but time on my hands. And I think today's consumer needs that level of attention.
Agree with you.
And our industry hasn't really hired any good younger people in a while. Like I would say there's a group that's probably now in their early 30s, and I can see on Facebook and everything, they're all having kids now.
Yeah.
And the second they have kids, I'm like, yes, like even playing field.
Yeah, right.
But we have some young guys that we hired at our company, and they're doing fantastic. They're serving the void, which is the people like me that are a little distracted in life and, you know, still work evenings and weekends and stuff, but I'm not a big happy hour guy really at all ever anymore. 3 to 5 hours every weekend, every day of every weekend. I'm probably doing something with my kids.
Sure.
You know, 2 years from now, I'm going to be wide open. They're both going to be in college soon. But for now, the younger person can come after that guy. Jake Ryan. Love Jake Ryan. He's a local loan officer in DC. And I remember meeting him back in, it's probably 10 years ago. And I was telling him that same thing. Like, you're a young guy, good looking, smart, sharp, work hard. I'm like, really, all you have to do is go to all my agents and just be like, hey, I know John's great, but he's got kids.
Right. Yeah.
You know, there's going to be a time he's not available. Just, you know, just call me.
Exactly, right.
Yep. And we laughed about it. He did that too.
He did that. Look at that.
Business.
That's good.
But it's true. So I think the problem with our industry, if there is a problem, is we're not bringing enough younger people in to then serve that level. We're also, as an industry, not good at training those young people either. So then the reason, I don't know if you noticed this on your side, but lower sale prices get out of the city. So like first time, like true first time home buyer stuff, like $200,000, $300,000, $400,000 properties. There's a lot of problems, a lot of settlement delays.
Yep.
And when I dig into why those delays exist, it's usually bad loan officer, right? Or loan officer asks the question, buyer gives an answer, gives the wrong answer. And then there's a level of trust of like, oh, well, you're telling me the right answer. No one's being deceitful. It's just the way they perceive, like, hey, how much do you make? Oh, I make 150. Oh, cool. That's all. Congratulations. And then conversations move on. Well, really, they're self-employed. They have a bunch of tips. They work 3 jobs, but they just started one job last week, and it, you know, pays. Like,
Wasn't
can't count that one.
Yeah.
So that's I would say yes, good time because we are an aging industry. Hard to get started. Hard to get trained properly.
Yeah, that makes sense.
So if you think, why were rates high? So rates were high because of inflation. And now we have this initiative, whether you believe in it or not, or whether even it's real or not, right? Saving, cutting off spending, therefore saving. That a lot of that is going to be deflationary or disinflationary. So Elon said in a conference, and he was like, I would not be short long-term treasuries. And long-term treasuries are usually the ones tied closest to inflation. Like that's the future. Short-term rates are what the Fed's going to do. And then Treasury Secretary Bessent said recently, they're focusing only on the 10-year. So a lot of people started saying that the reason all the tariffs are happening right now, and the reason it's that hard tone, like they might not care about Wall Street. So in the old days, when Wall Street started crashing, everyone's like, oh my God, we got to save Wall Street.
Yeah.
Got to drop rates. We got to do all this stuff. Bessent came out yesterday and said 2 things. We have to transition economic growth from government to private sector. And then he said, we're focusing on Main Street. Wall Street's done just fine the last couple of years.
Okay.
So if that's the case, they might want a real economic slowdown as like a reset. And in that moment, rates could get really good. So rates could get good because of the economic situation getting worse, but they could also get better because there's this battle against inflation and spending. So that's all of a sudden, that's why interest rates have been dropping and we're in the low 6s. You pay a point or whatever, you can probably get in the 5s. Yeah. On a 30-year, which is, we haven't seen that since, August, September last year. The question is, does that continue? So other people said, there's this phrase, find the pain, magnify the pain, be the aspirin. If the pain is inflation and rates, well, now you got to magnify it. And then you bring a lot of stress into the system. And is the aspirin going to be some massive stimulus package, right? Like some big tax cuts and like all this stuff that comes in this next spending bill. And then that's probably when rates could go higher again. Okay. So we might actually see this period where interest rates are really good for the spring market. But second half of the year, we start seeing interest rate stress again. But maybe an economy that's really lit on fire. You know, no one really talks about this much, but everyone knew tariffs were coming. So what do you do when you think things are getting more expensive? You buy as much inventory as you can. Right. So that's why, there's this thing called the Atlanta GDP Now, I think is what they call it. And all of a sudden, it just took a nosedive. It was like up 2.5% like a month ago. And then it was up like 1.4% 2 weeks ago. And then it just dropped to like -3. So what a lot of people are saying is that everyone sort of front ran, like the second everyone knew, okay, Trump's in play. All right, what's Trump going to do? Well, he's probably going to try to downsize government and have a bunch of tariffs. So, well, we better buy all of our inventory that we need for the first half of next year. So then businesses spent a whole bunch of money, gobbled up a bunch of stuff December, January.
Gotcha.
Right?
February. Materials and stuff like that. Whatever it is.
You need, you know, like any marketing stuff, t-shirt, like whatever. Everyone just bought a bunch of stuff. So now you might have that delay where just like COVID, there was a lot of pulled forward demand in
Yeah.
housing that we mentioned.
Yeah, so
Well,
there's
then,
not going to be as much spending moving
yeah,
forward.
so you might go through this deflationary or disinflation, right? So not like negative cost, but lower rate of change. You might see all that in the next 2-3 months as people wind down all their inventories, and prices might actually get better. So yes, tariffs are long-term inflationary, you could say, but then the impact of the lead up to it and then the immediate after, and then the economic issues that might come from that coupled with immigration and government spending cuts, you put all that together, that could be the low rate environment.
Okay. Yeah. We've kind of like you said earlier, like we look at 2024 and we're like, yeah, this could be just the norm. We just need to get used to this and grind away and truck along and there's no great answer. And if somehow something crazy occurs, which I do feel like, and I remember reading data on this, there's something massive that happens in the world every X amount of years that no one ever sees coming.
Black Swan events.
Is that what it is, right? And so, I don't know, are we close to the next Black Swan event from how often do they happen?
I mean, so they say the thing about a Black Swan is like you never know. Now, my personal feeling is, again, not trying to be political at all. 8.8 out of 10 people in this area voted for the other person. But I do believe we were on a course for a massive event because you can't just keep spending money like crazy forever. We would have had like bond vigilant, like it would have just been something would have popped and been really ugly. I feel like this is an orchestrated bursting of bubbles and a orchestrated reset. So if you buy into that being part of the process, whatever we're about to go through is going to be a lot better and potentially prevent something like that.
I've never understood I mean, I kind of understand it, and I'll give you my point of view, but how we have this debt that's gone up to 37 trillion. In any company you run, you can't just keep borrowing money and, eventually you default. Now, I understand you can print more money and maybe that's the answer. But what is your take? Like, were we just going to keep going to 50 trillion, 60 trillion? How does that end? I feel like it has to end badly.
So one-sided government, period, they're always reckless and they spend too much. Like everyone, right? It's just like, now's our chance to just do whatever we can because we might not have this chance again. And that chance is like pet projects of whatever, social stuff, spending money. The argument is always, can you inflate your way out of the debt, right? So we just experienced a lot of inflation. So a lot of the people I work with, they used to make $120,000 a year. Now they make $180,000 a year. Well, that extra $60,000 taxed at 35%.
Okay.
Well, that's an extra $25,000 that can be used to pay down government debt, right? Yeah. So the reason they always say inflation is not bad, like some people believe that that was the goal. Okay. Like, so if you inflate a bunch of stuff and incomes go up, and then maybe something happens and then you refinance all your debt lower, but the economy expands, you can kind of water down the debt. So that's why there was always an argument for spend our way out of it.
Even though it never lowered. I mean, so there was one surplus, Clinton, I believe. But like, right, I mean, okay, that's good.
No, I'm in the camp of, that's why I said earlier, if we kept going on the same path, I don't think it ended well.
Yeah.
Or would have ended well. Because at some point, and you got to raise money, right? You could always buy your own debt, but then you have inflation spirals. But you have to go out to the rest of the world and businesses and people to buy your bonds. And I think like this year alone, I think we have $7 trillion of bonds. Okay. So like when you buy a bond, so let's say the government for COVID, they wanted to buy a bunch of stuff and have, PPP, ERC and all that stuff. And let's say they took $1 billion bond. Their options were, I could do this in a 10-year period or a 5-year period or a 3-year period. Right. Well, they were idiots. They took a bunch of short-term debt, like 3, 5, 7-year debt. And over the last couple of years, they did too. Janet Yellen took a bunch of 3-year papers. So she had to fund the government with their deficit spending and all the other stuff. And they took a whole bunch of 3-year bonds. Well, at the end of 3 years, let's say it's Latin, big rich guy buys a bunch of U.S. treasuries. They pay you a yield for 3 years. And at the end of 3 years, they give you all your money back. But the way they give you all that money back is they have to go back to Wall Street, raise more money at new rates to pay you back. So that 2% bond then went up to 5.5%. Right. So then that was the other fear of everything that was ahead. That's why if you keep going in all these little random circles, strategically, there's a very real reason why this administration is trying to focus on the 10-year. They want to refinance all the debt at a much lower rate for a much longer period of time.
That's interesting.
And that's why it just feels like a lot of this is like an orchestrated mini collapse.
Yeah, to lower rates in a sense.
Right? Lower rates. Yep. If there's enough fear in the market, everyone buys treasuries. So you put that fear in there, and then when you bring a bunch of issuance out, and incomes are still kind of fixed, and then you kind of bring in some stimulus to
Yep.
keep growing, that could be a way of getting the debt
Okay.
more manageable.
Yeah. So Twitter today, how often are you tweeting?
So I don't watch any news. I don't read any articles from like CNN or whatever. So everything I consume is really on Twitter. And I feel like what I like about it is you can kind of find really smart minds, people that I could never, ever, ever talk to, that I have real conversations with. People with 500,000 followers, 250,000, and you would ask a good question, they'll give you a good answer right back. So I feel like I'm a lot smarter in a year, 12,000 tweets.
Yeah, there you go.
Whatever they are. So but I'm engaged with it. I like it.
That's cool. If you're not watching TV and like you're looking for challenging concepts, you enjoy it. I mean, it's the perfect platform in that sense, right?
Yeah. If you want to know more about everything, you can go there and at least
get many perspectives.
A whole bunch of perspectives, right? I mean, people, because they can hide behind their pseudonyms or whatever, right? Like people come after either you or whoever. Like I won't look at a soundbite anymore because a lot of times you see sound bites and then there's a narrative with the soundbite, but I won't make judgment on that until I watch the whole thing. I truly believe we live in a world where everyone has a motive. And, like with economic reports, we can paint any story we want to, good or bad, with the same report, just by the 4 or 5 data points we pull from it. If I pull these 5, 100%. I can tell a story that's completely opposite than these 5. And I think news and media is the same way. And that's why I believe in always like not believing. So my wife and I, when we say something, we're like, did you see that? Like, I don't know if we can believe it, but that's the asterisk I put behind everything. I don't know if I believe it, but, and then we talk about it.
What's the angriest, meanest someone's ever been at you? Does anything stand out?
Honestly, right now, everyone, so I'm trying to be a voice of reason of the DC housing market and the DC environment. And, I had one post recently and I was like, look, there's a lot of vile hatred against DC employees, government employees. And like, these are great people. Like I work with a lot of these people. They're nice, good-hearted people that took a job application, showed up, does their job really well, does everything they're asked to do. Like they're not evil people trying to take down the world and waste your money. And I got railroaded on that, right? Because you get outside of this area and I get it. Like people hate government workers right now. But it's kind of like, oh, look what your government is spending. And I was trying to say, and I keep saying it, like, don't be mad at the individual. Have empathy for them. It sucks for them. And then be mad at their boss or be mad at the person that passed that whatever that allowed that money to go and do whatever.
Fair point.
Be mad at those people. That's totally cool. Because it kind of reminds me, I was telling my wife the other day, so emotionally 2009, 10, 11 was really hard for me. Because all the loans I did for a decade, like so many of them were going to foreclosure and short sale. And then the ripple effects of those stories. So like a family bought a house and it was new construction. They were so happy their kids are going to be in this new school. And then house goes to short sale foreclosure. They have to rent someplace. One of the spouse lost their job, so now they're living in a crappy area. Kids go to a bad school. Kids get into drugs and then crime, and now the kids in jail. Like I had so many of those stories. It was like I was like a therapist. Like I felt I wasn't doing any business because all my builders went under. I was just like fielding all these phone calls, and it's kind of like there's like a glimpse of it today where I talk to someone and like I just lost my job. Right, people that bought houses the end of last quarter that lost their job.
Right. And there might be a stigma now. Oh, you're in the government, you don't work hard. And so, and then they don't get hired. I don't know, right? And then
I don't know if it's that as much here because I think here it's like our lifestyle. Like we know these people and our businesses know those people. And so many people that work for the government, like when they finally jumped out, like when they hit their retirement years, they found jobs very, very fast and got big raises. So like there's a part of me that I don't feel bad in the sense that people are just going to be a whole bunch of unemployed people. But that was probably the most hatred that I got was trying to say these are real people and they're not evil. Stop trying to like spread all the nasty hate of like screw those people. That's what they deserve.
I'm jealous of you in the sense that you're going out and saying what you feel. And like, I'm sure there's a lot of things that I want to say about things I've seen, whether in DC or whatever, that I'm just like, I don't bring up. But so I'm jealous. It's a nice feeling, isn't it? Free to kind of say what you believe.
It is. But we're also in a world where I think people, and I don't like this about how our lifestyle is right now, where like if you have a belief of something and it just goes against something that they believe, I mean, they really hold it against you. I don't like that. I'm as center as you can get politically, and I dance on both sides of the aisle depending on the issues, and I have my whole life. 98% of my friend network is DC, but I also found for the longest time, like I was afraid to say what I thought, right? Like this whole debt situation, like the people are like, they shouldn't be doing that. We can't lay off these. Actually, yes, we can and we should probably because all this other stuff's going to happen. Like I never would say that stuff before.
Yeah, right.
You know, because I was like, oh man, I don't want them to hate me. I don't want them to think like I'm against the area. But it's hard for people locally to have real conversation about this because if we're not personally impacted, we know someone who is. Right. And that's heavy for a lot of people. And it's hard, but people outside of here want it all burnt.
Exactly, right? All right, a little rapid fire for you, bud. What's one change in the mortgage industry you didn't see coming? It's hard to surprise you, I'm sure, at this stage of your life. I talked to you, it was like 2018, 19. You're like, rates are going to go like below like 3. And I'm like, okay, John, sure. And they did.
Yeah, that was
so
18.
like you saw that one coming way before, and that was when rates were like close to like 4 or 5 and stuff.
Yeah.
What was the reason behind that?
If rates go up for a reason and those reasons change, then they should come down, right? It's like, think about, so it's funny, this suit, I have not bought a new suit in 7 years. Right. This shirt I realized today is like 7 years old. My cars are old. Like we haven't bought anything new, right? But then when things are good, you go out and people buy stuff, right? I buy a house, I'm going to buy furniture, I'm going to buy a new car. But then once you're outfitted, your spending goes down a ton. Right. So then take that to the whole country. Right. So the economy's really good. Everyone's going out and buying a bunch of stuff. When things turn a little, well, you're good enough, right? If stock market starts dropping, people are like, I don't think you know what, we're going to take an easy vacation. Maybe we'll skip one. Maybe we'll stay home this time. Our couch is fine. Like, we don't need a car. Let's ride it out for a while. So that contraction of people buying stuff is what then leads to the part of the cycle. Okay. So it's kind of like, I think all that stuff, and that's what's made this cycle so hard to predict. Like you and I talked a year ago, we're like, why are things not breaking? Yeah. Right? Rates are high. And there was like a report, like auto loan and serious defaults were up. Credit card defaults were up. Credit card balances were at record levels, but nothing was breaking. Yeah. It was fascinating. Now we might start seeing all these things break. Yeah. I mean, breaking's good, isn't it? I think the bulk of all the people that live in this area, they have their finances are probably about as good as they've ever been. Yep. Their assets are probably as much as they've ever been just because of the market. And I think stress is going to compress rates and it's going to give more opportunity to people. I kind of want to see that happen. What's your hot take for 2025? I think 25 is going to be however you feel right now in the early part of the year, you're going to feel the exact opposite by the end. Oh, okay. I think right now it feels like there's a lot of pressure and a heavy mood. And it's like, is fill in the blank going to survive? I think once we get to the second half of this year, I think there's going to be a really neat rebalancing that takes place in the market. That's going to make everyone feel really good. It took my whole pipeline and I looked at everything and it was, it was 1,000 loans since 2020. Only 10% of the loans that had two people. 10% of the loans had a government worker. 85% of those people qualified fine without the government worker's job. Okay. Yeah. So it's like if everyone gets fired, only that little bit of stress, of stress, our market will be fine because if there's a benefit of low rates in the past, is a lot of people locked in all that good rates, good housing payments. Like financially, they're going to be able to survive. So this isn't like where the financial crisis was back, because everyone lost their jobs and no one had equity and no one had cash and assets. That felt awful. Yeah. What's your go-to money rule? So let's say some things like X per month or like my Verizon bill. I just did this not long ago. I think I spent $500 a month on Verizon in my household. Yeah. But what I did is I gross it up. So for me to clear $500 a month to pay that bill, I have to make about $800. So we spend $10,000 a year on Verizon, right? So then I annualize it. So I gross it up and annualize it. And when I do that, I find we spend money differently in our house. That makes sense. Like so when you're like really floating. You're like, I have to make this much to pay for this bill. And then, so I'm not going to buy this or whatever the case is. Yeah. Or, we're eating out every month. It's like $600. Well, I've got so $600, I have to make 1,000. So that's 12 grand a year. So it's 12 grand a year, and we get crappy food when we eat out. Yeah. So it just... Maybe we won't go out to it. Yeah. But the other part of that is cutting credit card, like truly just hitting the lost my card button on a card. Like if your account's sloppy, if you just do that, you find very quickly what you didn't need. Give me a sign you're working with a bad lender. Lots of positivity. Endless positivity, I think, is bad lender. So when I think of all the problems that I work on, it is that a lot of loan officers view that conversation as we're supposed to be happy and I'm supposed to make you feel happy and everything's going to be easy and everything's going to be great. Yeah, let's go. Instead of pausing, asking another question, kind of digging in a little to find out some issues or some problems or some, hey, did you think about like that kind of stuff? Yeah, trying to find the issues so you can get ahead of them, right? Yes. Accepting what you tell them and moving on, not getting documents and being too rah-rah.
Right.
I think that's usually the biggest sign.
Is there a big mistake you see home buyers making today?
No, I think today's home buyers are smarter than they've ever been.
Mm-hmm.
I think the conversations I have with people, I don't feel a lot of people being extended. I don't feel a lot of people being sold by realtors. I would say the lower end first time home buyers, I think if there are mistakes, it's there.
Yeah.
It is people being, so for instance, an FHA loan, you could have really, really low credit scores and carry a whole bunch of debt compared, like the highest percentage of debt of any loan out there other than VA, but that's different. And a lot of people are like, hey, you qualify. Yeah, you can do this, you can do this, you can do this, right?
Mm-hmm.
So people that just fall for well, they told me I qualify, so I must be able to do this.
Right.
So the ones that don't think for themselves and they accept the professionals that are compensated on commission as the guide, like, that commission guy said I'm going to be great. That's where I would say the mistakes are.
What's the worst mortgage myth floating around in 2025?
The date the rate thing has died.
Yes.
I'm actually happy about that.
Yeah.
So
people
I think
kind of like people were shaming people for saying that, but you don't hear it anymore.
You don't hear it anymore. Yeah, but that I would say that's I don't know if that's a myth, but it's still out there.
Yeah.
But a lot of people are like, I'll just refi later. But I'm not hearing that. That might have been a last year thing.
Yeah. Is there a mortgage hack that actually works?
When I was young, I worked too much. I didn't think a lot. Right. All I thought about was my job. And so there's a guy, Louis Berman. He works with Allied too, loan officer. And I gave him this lesson of these people that did the legit house hack thing, right? Like buy a house, live in it for a year, buy another one, live in it for a year, right? Like, and he was young, so he could live kind of anywhere. It didn't matter. Yeah. Your kid's got like 15 properties now.
That's
and he's got to be like 31 or 32 or something. Like,
I'm definitely jealous of the whole, live somewhere for 2 years and then it's tax free, right? And then they move to another place 2 years and that.
Yeah.
I never did any of that stuff.
No. And then we're old. Like we can't.
Yeah,
like we can't buy the lower priced house and get good owner occupied rates. The other thing I would say is there's a lot of people renting. I interviewed a guy recently and he has 3 roommates and they're each paying $1,500 a month. Mm-hmm. So it's $4,500 a month. Right. And I was like, well, why aren't you buying something? Mm-hmm. Like why isn't one of your parents at least saying I will help you? So I would say a parent helping their kid get their first place when they're young. Right. And kind of maybe going in it with them or not. Mm-hmm. But it's just like if we could have all done that when we were younger, when we weren't handicapped. Yeah. Right. Like I'm handicapped with kids, with lifestyle, with like kind of stuff.
It makes sense. It makes sense. And one thing I think that we have a problem with is they see this like cost, on the settlement statement of title insurance. But I mean, there is a lot of other stuff that goes in, really think of that we do. So, that's just a thought.
But it's fixed. Like that's what
it is fixed. And it is only it's a one-time payment too.
Yeah.
You don't have to pay it ever again like you do with everyone else. So that's another benefit of why it's worth, making that investment.
You know what's interesting? So there's so many times that like one thing you just said, and it's me too. Yeah. It's like, so we get compensated from doing the transaction. Yep. And then the transaction ultimately comes from connection that we know that's usually involved in real estate, like a real estate agent. How much do you help that real estate agent and all their other clients that never buy? Mm-hmm. So there's a part of me where it's like the loyalty should truly be, okay, the title insurance is the same no matter where I go. I'm going to have a really fun experience. Mm-hmm. And this company supports my realtor's business. Right. I think it needs to be viewed like that. Yeah. Like instead of people are like, oh, I'm going to shop around, try to save $50 on like whatever the title fees are. Yeah. It's like, well, actually, do you really like this agent? And if that agent, you like how they act and how fast they got their answers, well, a lot of times they get that really fast stuff because they are connected to people like you who get back to them very quickly. No, so you're kind of like through supporting the relationship, you're supporting your agent because I know you do too. Like how many times you research deeds and tax bills and owners and before contracts were even written and everything. So I think that's a different perspective of how individuals can look at the title company. It's a partnership with the agent. Essentially.
Yeah, actually, that's a really good point. I mean, we hire attorneys for different things. By the way, I was doing the math. I was like, can you imagine if we got paid by the hour?
Oh my God.
Like these attorneys, like people would really hate us, Yeah. When you look back at the time, I look at our team and they're working all the time. It's like, we're not getting paid that much when you really think of all the hard work.
No, not at all. So. That's why I think that it's like a new thing that I just thought of. Like it should really be the connection of like supporting the team. Right. Like my agent is successful because of this company, and all agents generally will have like their person, their go-to lender, usually maybe 2 or 3, go-to title. And it's like, that's the team.
Right.
And then when the team is connected,
Mhm.
everything's awesome. And everyone's like super happy. And
Yeah.
oh, it's great. It's when you break up the team. It's like
Sure.
some lender out of like Wisconsin and then, you know, some title company you've never heard of.
Yep.
If I could go back in time, I would have
Yeah.
been, I would have done title.
I like it. I like
100%. I would have been in the
Didn't
title
you do
business.
title one
I
time?
did.
Yeah, you did.
Yeah. For a bit. And it was, you know, in the early part, I didn't deal with first 10, 12 years of my career.
Yeah.
I didn't deal with a lot of, so like I'm very fortunate now to deal with like our stereotypical DC person. So
Yeah.
well-educated, smart, clean,
Mhm.
they have assets. Like the conversations can just sort of be bigger. And my job's more enjoyable in that space.
Yeah.
I think.
So people out there, you got to follow you on Twitter. What is
Advisor
what is-
John, you can't cancel me if I say something you don't like. I wish more people locally were on it.
Yeah.
It would be neat for locals to get more perspective. Like
Right.
anytime you can have dissenting views, I
Yeah.
think it makes the passion in your belief so much stronger.
Yeah.
And I think people are lacking that. Like when you get in echo chambers,
I agree with you.
right? Like you're stuck, and sometimes pulling out will allow you to see the way. Like when I said I'm trying to be like the champion of DC
Yeah.
government workers. Like there's a lot of hate out there.
Yeah,
And it's like,
sure.
but I get it. So that's the
Well,
difference.
and so the way to do that in the mainstream view is you actually have to watch 3 different channels of the news.
Yeah.
And then you'll get different perspectives. And
Right.
you got to listen to all the views. You
Yeah.
gotta hear it.